Hey everyone, Merry Christmas. Hope everybody's doing well. Scrolling through the AMC search results on YouTube this afternoon, and I saw this video by StockJ. Now, I hadn't looked at any of his videos before, but I had kind of wanted to, but just never did. So I took a look at this one, but then I was looking through his channel and I saw a bunch of interesting titles, and I just wanted to take a look at some of these here. So, expert says AMC will squeeze, politicians against AMC, 1.48 billion fake shares. This is not the end. Hedge fund loses 1.5 billion. Massive comeback awaits. Expert says 1 to 5 billion fake shares. Gamma squeeze pending. Possible share recall. PhD estimates 1.5 to 5.5 billion shares. Wow, huge companies by AMC. Elon can help AMC squeeze. Charles Payne says AMC will squeeze. Gamma squeeze coming. Will AMC squeeze tomorrow? AMC can hit $1,000 a share. Charles Payne says AMC can hit $1,000. Will AMC squeeze tomorrow? We can help AMC hit 2,500 plus. Will AMC squeeze on Monday? AMC squeeze will come soon. Will AMC squeeze tomorrow? AMC gamma squeeze coming. Expert said AMC will squeeze. Now I have to be honest with you guys. I sorted his videos from oldest to newest. These are his oldest videos. These videos are all from 4 months ago. Not like you could tell, right? So here it is in the newest to oldest order. Can AMC beat 10,000 this week? Proof AMC is about to squeeze. Proof AMC can beat $270 soon. 4.6 million AMC shares to borrow? Huge bullish indicator. This can help AMC explode. Why AMC can explode 10,000%. Now, we went from 10,000% to $10,000. Wow. Now, 10,000% is 100 times. So, with the stock price currently at $28, you're looking at about $2,800 on that 10,000% explosion. Whereas today, he said $10,000 a share. And then both days before the 10,000%, it was $5,000, which is like 20,000%. So I don't know. It's kind of weird. Why AMC is about to explode. 7.4 billion AMC short shuts down. Got that one open here. So this is talking about Anchorage Capital, and this indicates that they held put options valued at $227 million. So that's not the same thing as shorting. So that's not really accurate. So here it says why AMC may beat $280 soon. So that's only 1,000%. So it went from 1,000% to 20,000%. 10 days ago, $280. 2 days ago, $270. I don't know what accounts for that $10 difference, but I'm sure that there's logical reason. Expert says AMC can squeeze. Here's 270 again, and here's 5,000 again from 2 weeks ago. So yeah, I mean, this is just a bunch of bullish nonsense, right? So this one here, 4.6 million AMC shares to borrow. I thought I knew what he was talking about there, but it turns out that I did. It's Stonko Tracker, of course. Stonko Tracker only pulls data from interactive brokers, how many shares they have available to lend. And it does specify that on here, but it's not clear, and they never show that, and they never mention it. And then we had proof AMC is about to squeeze soon, and that was all about the Ortex short squeeze signal. So that was last week. Type 3 short squeeze signal was generated in AMC today, in addition to yesterday's Type 2 short squeeze. I tried to look up the actual definitions of what they're calling a Type 2 and Type 3 short squeeze signal, but it wasn't immediately apparent, so I didn't want to waste too much time on it. If anybody knows what is a Type 3 short squeeze signal, what's a Type 2 short squeeze signal, can you direct me to some resource that explains that? That would be good, okay? And how we can help AMC beat 5,000. And this one was interesting because it's basically talking about payment for order flow. And he's got an Investopedia page up here that shows quarterly payments for order flow received by security type in 2020. Now, keep in mind this is 2020. But it shows the brokers on the left, TD, E-Trade, Schwab, and Robinhood. And you can see that all these brokers, for both equities and options, substantially increased the amount of money they received from order flow payments from the first quarter to the second quarter of 2020. So, for example, TD for equities increased 98%, so it doubled. E-Trade equities, 68% increase. Schwab is the lowest at 27% for equities, and Robinhood for equities increased 122%. And that's just from first quarter to second quarter last year. So it'd be interesting to see what these figures did after this or into this year. And this information would seem to corroborate one of my recent points, which was that the off-exchange volume that the apes don't seem to like is generally, especially in AMC stock and a lot of the other meme or retail favorites, is mostly payment for order flow off-exchange execution, because new retail investors, by and large, are using payment for order flow brokerages. And they don't even have Webull on this list here. But they're another huge acceptor of payment for order flow, not to mention Moomoo, which is the one that StockJ promotes. So you can get a free iPhone 13 Pro, an Oculus, or more stocks free with this, and they're worth $3 to $3,500. And how do you think they can afford to give away all this free stuff? Well, they're accepting payment for their order flow. So just a little bit of irony that the apes seem to hate off-exchange execution or quote-unquote dark pool volume, yet they push payment for order flow brokerages. All the major influencers, Trey, Matt, Short the VIX, the Misinformed Investor, TMI, they all use Webull. And at one time or another, they've had Webull promotional codes that they have also promoted. So then here we see StockJ promoting Moomoo, which is also promoted by Finance News. And then he goes on to talk about payment for order flow as if it is the smoking gun that's suppressing the price of AMC. So it's just a confusing narrative. It's a very half-baked narrative. It's uninformed. But the point here is that payment for order flow increased dramatically. And we know that retail engagement in the stock market continued to increase throughout 2020 and into 2021. So again, it'll be interesting to see how these numbers progress forward. So here's an example of the emotional manipulation and just the shitty attitude of apes. Imagine if you sold AMC on the dip at $20 or $21 on Monday. Paper hands don't deserve the MOASS. Well, first of all, I would say, why would you sell on a dip? That's just bad investing, bad trading. You're supposed to buy low, sell high. Objectively speaking, if you bought the stock at some higher price level and you sold at $20 or $21, you lost money, which is the opposite of the goal of the stock market. So there's that. But generally speaking, I don't like this type of language. I don't like this type of antagonism. This does not promote people to learn and do better. The implication here is that if you sold at $20 or $21 last Monday, then you were panic selling. And ostensibly, you don't deserve to profit from the incoming short squeeze. Now, if it were a matter of what people deserve and don't deserve, we would be in a completely different situation right now, I think. Because the reality is, the people that are pushing this garbage narrative with all this nonsense, do they deserve to profit off of the apes? Do they deserve to make money off of literally pushing misinformation, false information, misleading information, conspiracy theories? Do they deserve that? I would say they don't deserve that, but that's my opinion. What they're doing is not illegal. Now, I think you could make a moral or ethical argument that it's wrong, but beyond that, as somebody who is constantly trying to improve and learn more and do better in all areas, but especially in the stock market, I don't appreciate misinformation. I don't appreciate being jerked around. And I don't appreciate these grifters pushing the same narrative, the same bullish narrative day after day after day, never being held accountable. So that's why I'm doing what I do. I want to close this video out with a little passage from this book by Martin Pring, Investment Psychology Explained. It is a classic book about investment psychology, and it's been very helpful for me, and I think it would be helpful for the apes as well. So I just want to read a little bit from the beginning of chapter 2. An investor or trader faces a constant bombardment of emotional stimuli. News, gossip, and sharp changes in price can set the nerves quivering like the filament in an incandescent lamp, unless properly controlled. These outside influences cause the emotions to shift between the two extremes of fear and greed. Once you lose your mental balance, even for an instant, your will and reasoning will be swept away, and you will find yourself acting as the vast majority of market participants act, on impulse. To counteract this tendency, you must be as objective as possible. Remember, prices in financial markets are determined by the attitude of investors to the emerging economic and financial environment rather than by the environment itself. This means that price fluctuations will be determined by the hopes, fears, and expectations of the crowd as they attempt to downplay future events and their biases toward them. Your job is to try as much as possible to ignore those around you and form an independent opinion while making a genuine attempt to overcome your own prejudices. The markets themselves are driven by crowd emotions. Nothing you can do will change that. It is a fact that you have to accept. Despite this, becoming a successful investor demands that you overcome your mental deficiencies and rise above the crowd. As a natural result, you will find yourself outside the consensus. Thanks for watching. I hope you're having a wonderful holiday. Leave a comment and join the Telegram Finance chat. The link to that's in the description. Hope to see you there. Otherwise, take care. I'll see you here.
I met you at my show.